but let's focus on an important stock to track today. That's going to be Paytm. The Reserve Bank has directed Paytm Payments Bank to stop onboarding of new customers with immediate effect. Ritu's been on top of that. She's here to explain what does it mean, its impact, as well as what a brokerage is making. Ritu, first of all, good to see you in Mumbai, and tell us about this piece of news.
Well, good to be here in Mumbai. But, first to make a differentiation between the Payments Bank and Paytm as you and I use it on the application. That is unaffected. Yes. It is the restrictions that have come in on the Paytm Payment Bank. Now, there, for all practical purposes, it's as good as, the bank can't operate anymore until the restrictions are lifted, and there's no clarity on when that will be. So first, RBI said stop onboarding any new customers. Second, it has said that this action has been taken because of persistent non-compliance, and there were significant material supervisory concerns that it observed in the bank. So what it has said is that in the payment bank, there can be no credit transactions, there can be no deposits. Because the payment bank also has a wallet license, customers cannot top up their wallet balances after the end of February, that is February 29th. But if you already have balances in your wallet, you can continue to use it, you can utilize it. There'll be no restrictions whatsoever. Apart from that, in no mincing words, RBI said no banking services can be offered by Paytm Payment Bank other than withdrawal or utilization of the existing balances. The nodal accounts of 197 Communications, the parent entity, and Paytm Payment Services are also to be terminated by the end of Feb. Now, why this severe action, many people are asking, but do keep in mind that back in March of 2022, RBI had first taken, sort of a warning action against the payment bank for non-compliance when it came to IT, KYC processes, and so on. And it's been 22 months since then, and it seems that there's been no rectification of these deficiencies, which is why you've now seen the RBI ask the payment bank to stop onboarding customers. We spoke to our sources and we understand that about 3,000 to 4,000 crores is the total amount of deposits that the payment bank is holding. Remember, because it is a payment bank, it can't really lend. It only facilitates transactions. Paytm said that it expects an annual EBITDA impact of 300 to 500 crores because of these restrictions, but it is on a path to profitability. They said they're working with other banks here on and not Paytm Payment Bank for the payments business, because remember, the regulator also wants them to maintain this arm's length distance between Paytm and the payment bank. Bernstein now says that this effectively ends the operations for all practical purposes for the payment bank. It adds to the already heavy regulatory overhang. Macquarie says that the lapses are quite significant, and therefore it'll hamper their ability to retain customers. The bigger issue is that they're not in the good books of RBI, and their relationships with other banks and NBFCs who they tie up to give loans may also get affected. And Jeffrey similarly says that the direct impact of this move could be 20 to 30% of EBITDA, and the reputational impact about 20 to 25%.
They've cut their estimates by about 45% on the EPS, Ritu, a spate of downgrades coming in. So thanks a lot for putting that into perspective. Paytm will, of course, be one of the stocks on our radar today. But that's